It's very important to talk about small business excise taxes. So today I'm going to give you a guide and I'm going to show you the top 5 things the IRS wants every business owner to know about small business excise taxes. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I'm going to give you 5 important things that the IRS wants you to know as an owner. And the federal government taxes businesses that manufacture or sell certain products, right? So if your business uses various types of equipment, facilities, or other products, you may need to pay something called an excise tax. So often to their detriment, many businesses do not focus on excise taxes. And in fact, they may be unaware of them entirely. And this is crazy. This is very, very dangerous because the truth is that excise taxes may have a serious financial impact on companies. And in some cases, excise tax exposure may be material to a business. So, in the current sort of COVID-19 related uncertain economy, reducing excise tax liability and identifying excise tax credit can enhance your company's bottom line and liquidity. So, moreover, evaluating excise taxes and planning opportunities can improve your company's EBITDA as excise taxes are treated as an above the line cost of goods sold. Right? So let me just define what we're talking about here. Definition of excise taxes. I mean, those are actually taxes imposed on commodities or activities such as fuel, tobacco, or wagering, and are typically reflected in the final price of such products and services. Excise taxes are passed on to the consumer who is often unaware of them. The excise taxes companies pay are enacted by legislatures to serve as user fees with various purposes. First, to discourage certain behavior, to promote certain activities, or simply to raise revenue. Businesses can benefit from excise taxes. Let me give you an example. Taxes imposed on fuels and heavy vehicles fund highway improvements. Taxes imposed on air transportation fund airport and airway systems. Similarly, certain environmental excise taxes were enacted to actually discourage the use of CFCs and other chemicals that harm the ozone layer. So, use of biodiesel or alternative fuel over petroleum-based products has been encouraged by renewable fuel credits, for example, right? So, taxes on alcohol and tobacco raise revenue for the Treasury General Fund. So, the federal government collects over $100 billion of excise taxes per year. This is huge, all right? So let's talk about the agencies that take care of. There are two. So there are two agencies under the U.S. Treasury Department that administer all existing excise taxes. So first you have the Internal Revenue Service that everybody knows, and then you have the Alcohol and Tobacco Tax and Trade Bureau, the TTB, that is not really as known as the IRS, but TTB plays a crucial role. Now, the major taxes IRS administers relate to petroleum-based fuel, including gasoline, diesel fuel, kerosene, and crude oil. You have alternative fuel, heavy vehicles, coal, sporting goods. I'm referring to sport fishing equipment, bows and arrows, air transportation, environmental taxes, Affordable Care Act taxes and fees, wagering, and foreign insurance. So this is actually what is within the purview of the IRS. Now, the TTB, the Alcohol and Tobacco Tax and Trade Bureau, administers taxes related to alcohol. So here I'm referring to beer, wine, distilled spirits, including vodka, right? Also, the TTB administers taxes related to tobacco, firearms, ammunition. It is important to note that each excise tax has its own rules for imposition, rate, tax base, exemptions, and credits. So it's kind of important if you are in a specific industry to actually surround yourself with the right team of specialists. You need to have a lawyer or a tax accountant who understands the minutiae of excise taxes for your particular sector. Compliance obligations for excise taxes can often be quite complex. Again, this is why you need to enlist the help of professionals. In most cases, excise taxes are reported quarterly and semi-monthly deposits are due. And additionally, some companies must file inventory reports or other reporting obligations even if they're not liable for the tax. The thing here is that you have to actually pay attention to those two things, the payment and the reporting. Again, this is, we can't really give generic advice here because every industry is different. So you might want to actually reach out to the IRS or the TTB or hire the right professional to kind of help you. Let me talk to you about the industries that are affected by excise taxes. And you actually will be surprised because many more than you would think. The primary sectors affected by excise taxes include energy, that's for sure, right? You have transportation. Here I'm talking about ground, air, and water. You have industrial manufacturing, food and beverage, of course, certain consumer products, and life science. And importers and exporters may also be subject to certain excise taxes. And the legislation is constantly changing. The IRS is constantly looking to expand through powers granted by Congress the spectrum of excise taxes. And the same thing has been done at the TTB. And even banks, insurance companies, and credit card issuers may encounter excise taxes. Besides, end users in industries such as building, construction, power and utilities, aerospace and defense, farming and logistics may claim certain refundable excise tax credits. Let me give you an example. Users of tax fuel and off-highway businesses or in farming can claim fuel credits of up to $0.243 per gallon, so 24.3 cents per gallon. And users of propane in forklifts, such as those used in manufacturing facilities or distributors, may be eligible for alternative fuel credits of up to 50 cents per gallon, equivalent of propane, which equates to roughly $1,000 per year per forklift. So this is a great, cost saving in terms of taxes if you are in that industry. One thing I also want to say here is that another industry that is affected by excise taxes is the manufacturers of non-beverage products. Here I'm talking about perfumes, food products, or medicines that use taxed alcohol in production. So they actually may qualify for a drawback of the tax paid up to $13.50 per gallon. All right. You also have nonprofit entities or state and local governments, which often qualify for exemptions from excise tax or credits on the purchase of taxed articles such as fuel, tires, and firearms. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Security Kiwi Show. So today I want to talk to you about the top 5 things the IRS wants every business owner to know. I've already given you one. So industries affected by excise taxes. And this is not just the IRS who wants that. You also have the TTB. And number 2, I want to talk to you about the importance of excise taxes for businesses. Very important. The excise taxes, when you really look at the whole picture, they may present a material issue to businesses that are liable for the tax, whether known or unknown. Again, when I use terms like material, it means significant, it means substantial, right? Now, some businesses have immaterial or no excise tax liabilities. However, some companies' excise tax liability can soar to millions of dollars per quarter. For example, fuel marketers, distributors, and blenders may be liable for excise tax on the gallons of fuel in a terminal or blended in their tanker trucks. Air transportation providers, including charter companies and freight operators, must collect and pay significant air transportation excise taxes. Even small, thriving companies may face large IRS proposed excise tax assessments. Some companies have encountered excise tax bills so significant it could bankrupt them. So this is something serious, folks. Some companies, and the crazy thing here is that some companies are even unaware that they should be reporting excise taxes in the first place. For example, importers of used highway tractors, trailers, or specialized mobile job site equipment are often surprised when the IRS initiates an examination asserting a 12% excise tax is due on vehicles they used in their business in the United States. Similarly, importers of electronic articles containing circuit boards, including computers, monitors, cars, trucks, cameras, and other digital items, may face exposure for the ozone depleting chemicals excise tax. This is important to know. And excise tax specific registrations and penalties can apply to companies unaware of excise tax responsibilities. So, folks, the picture I'm trying to paint here is a picture of I would say a familiarity and compliance. You gotta acquaint yourself with the industry you're in terms of the excise tax responsibilities. Certain fuel owners, for example, and petroleum marketers and traders who run afoul of the excise tax registration rules may not only face unexpected tax on their fuel trades, but could also potentially be subject to a penalty of $10,000 plus $1,000 per day for failure to register where required. Even taxpayers you wouldn't think of being subject to excise taxes can find themselves on the receiving end of an excise tax, such as a bank that owns fuel, for example. Companies that should collect excise tax but fail to collect or remit may face trust fund recovery penalties and personal liabilities for corporate officers. And with respect to fuel tax credit claims, the government has the power to assert, check this out, a 100% penalty on any claims that are excessive. And what is the impact of excise tax evaluation on companies' liquidity and profitability? This is an important thing to know also. Now, in this uncertain COVID-19 related times, businesses are looking for ways to reduce risk, improve profitability, and generate liquidity. And that makes sense, right? This is what companies should be doing in the first place. This trifecta of risk reduction, profitability improvement, and liquidity generation is critical. Evaluating excise tax positions and credit opportunities could improve your company's bottom line. Excise taxes are generally recorded as a cost of goods sold, so finding ways to reduce a company's excise tax liability and identifying credit opportunities can improve your company's operational efficiency margin. And this savings, guess what? They can actually enhance your company's EBITDA, earnings before interest, tax, depreciation, and amortization. So, in addition, many excise tax credits are refundable and may provide cash to companies with net operating losses or in situations where income tax credits cannot be utilized, right? So, with private equity, identifying ways to reduce excise tax or increase credits for operating companies can increase margins across similarly situated companies in the fund. And what kind of business strategy should you have with respect to excise taxes? In other words, which next steps should your company consider? The cool thing here is that all companies, and this is based on our research, can benefit from a fresh look at excise taxes. You want to consider performing a rapid assessment for excise taxes, and this assessment will include things like reviewing whether the business faces any excise tax exposure, evaluating opportunities for reducing existing excise tax liabilities, identifying credit opportunities, reviewing compliance operations for improving efficiency, identifying excise tax costs passed on by vendors, and reviewing whether tax has been properly determined. So, if an area of risk has been identified, the company can take a deeper dive into remediating the problem. Risk mitigation is very important, folks. So, if a credit or savings opportunity is uncovered, this may ultimately improve the company's profitability and operational efficiency. Now, what are the excise taxes you may have to pay? Here, I want to talk to you about the excise taxes you may have to pay and the forms you have to file if you do any of the following. If you manufacture or sell certain products, if you operate certain kinds of businesses, if you use various kinds of equipment, facilities, or products, if you receive payments for certain services, you got to have so Form 720. We're showing each form to you on the screen, as well as the hyperlink on the IRS website. Form 720. So the federal excise taxes reported on Form 720 consist of several broad categories of taxes, including the following. So you have environmental taxes, communications and air transportation taxes, fuel taxes, tax on the first retail sale of heavy trucks, trailers, and tractors, manufacturers' taxes on the sale or use of a variety of different articles. Then you have a Form 2290. This is actually a federal excise tax on certain trucks, tractors, and buses used on public highways, and the tax applies to vehicles having a taxable gross weight of 55,000 pounds or more, and report the tax on Form 2290. Then we have Form 730. So if you are in the business of accepting wagers or conducting a wagering pool or lottery, you may be liable for the federal excise tax on wagering. So you want to use Form 730 to actually figure out the tax on the wagers you'll receive. This is very important. The IRS has been very strict in the last 2 decades on Form 730 reporting and preparation. We also have Form 11C. You can see on the screen here. Use Form 11C occupational tax and registration return for wagering to actually register for any wagering activity and to pay the federal occupational tax on wagering. And excise tax has several general excise tax programs, and one of the major components of the excise program is motor fuel. Okay, so this is something, and this is linked with all the forms I've been talking about: 720, 2290, 730, 11C. All right, folks, this is it. This is actually the end of today's conversation. I was giving you a small business excise tax guide, things you need to know, and there are actually the top 5 things the IRS wants every business owner to know. So number 1, industries affected by excise taxes. Number 2, importance of excise taxes for small businesses. Number 3, impact of excise taxes evaluation on the company's profitability. Number 4, the business strategy related to excise taxes. And number 5, excise taxes your company may have to pay. Thank you so much for your attention. Really appreciate it. I will see you next time. But until then, remember, stay marvelous.